welcome to our quarterly market update, our very first under the new brand Brisbane Private Wealth. Once again, I'm joined by Steve Garth. Welcome, Steve.
Thank you, Rob. Great to be here.
Yeah. Steve, interest rates still very topical. Share markets have performed probably better than expected over the last 12 months. What you can tell us firstly about Australia?
Yeah, thank you, Rob. Well, in fact, we're going to see a similarity here through all markets, and you're absolutely right about the last 12 months. If you look at the chart we've got up at the moment showing the Australian stock market, the ASX 200, over the last 12 months, it's returned 13.5%. That's really good. But you'll see a lot of that return is actually in the last quarter of last year. But nonetheless, despite the fact that interest rates have been going up, the market seems to have ignored that and have gone up. But it sort of came to a head, probably only 2 weeks ago, when central banks, both here in Australia and in the US, said that you've got to get used to the fact that interest rates are going to be higher for longer. And I think the market was thinking rates are about to start coming down, it's going to be happy days, and they've had to take a breath in and go, ooh, actually these rates are going to stay high for a while. So what you see in the quarter, it's very flat. In fact, the Australian market's got a very small negative 0.8% for the quarter.
Okay, and what about developed markets, US, Europe?
Yeah, so the biggest part of the developed market index is the US.
Yeah,
it's about 65% of that index. And I'm sure the people have heard that what's really been driving the market in the 12 months are those big tech stocks. They call them the Magnificent Seven. Yeah. And there's a bit of AI hype going on, and those stocks have done amazing. So you can see that the developed markets have sort of been beneficiaries of that, and they're up by over 21% for the 12 months. But again, a lot of that happened in the last quarter of last year. And once again, same thing, we see that it's a small negative in the quarter. Be no surprise that the sector that's had the biggest fall is the IT sector. That's down 10% from its highs in July.
And emerging markets, what can you tell us about emerging markets and in particular China?
Yeah, so first of all, big picture, emerging markets, similar story, very flat quarter, not a bad year, only around 11.5%. And the reason why that's not as good or nowhere near as good as the developed markets is because of China. China makes up about 35% of that emerging market index. And despite the great hope that the China economy would really kick goals after they freed up the COVID rules, it actually hasn't happened. The China economy is just pretty sluggish, and of course that's dragging down the markets, the emerging market index, and it's probably dragging down global growth a little bit as well.
Okay, and obviously bonds being, again, still very, very topical. The expectation that interest rates will remain higher for longer. What is the expectation, or what has been the performance, and what is probably the expectation with bond markets as we speak?
Yeah, well, if we look at the performance to start with, clearly in this chart, we're showing the US 10-year Treasury yield going up. That's the biggest part of the global market. But the returns we're showing are for the global bond index hedged back to Aussie dollars. Yeah. And you can certainly see those smaller negative last quarter, bigger negative this year. Yep. I suppose if there's some good news there, overall for the year, the bonds have got a small positive number. And that's because there's a much higher income that they're generating now. Which is offsetting the fact that the bond prices aren't going so well. Now, you asked the future. So most market commentators would think that we've kind of reached terminal rate, both here in Australia and in the US. Terminal rate means we've kind of seen the peak of rates, but the central banks keep telling us that there's probably one more or maybe two more rate rises left. And the bond market's certainly looking at that and pricing that in. So you still see these yields climbing a little bit. So while we're close to the terminal rate, I don't think we're there yet.
Maybe a few more to go.
I think there's certainly one more in Australia to go.
We won't hold you to it.
Don't hold me to it.
No.
So the market's kind of dancing in the dark at the moment. It's really not sure what's around the corner.
Fair enough. Well, thanks, Steve. And thanks very much for joining us. And we look forward to seeing you again in the next 3 months.